Hi everyone, welcome to this session titled Introduction or Introducing Exciting New Baskets on the HDFC Securities platform. So basically in this session we are going to keep it crystal clear, crisp and clear, and we're going to try to figure out the details of the two new Tata baskets that have been launched on the HDFC platform, and we'll also try to understand who these baskets are meant for and what kind of investors can come into these kind of portfolios or these new baskets that we have launched on the platform. So now, before we actually delve into both these portfolios or both these baskets available on the HDFC platform, what we will do is, for the sake of or for the benefit of everyone who do not understand what small cases are, especially the new investors who are coming in, we'll just cover that briefly for the next 2 minutes, and then we'll move on to discuss the two new packs that have been launched. So what are small cases? Small cases, or HDFC baskets as it is referred to as on the HDFC platform, are nothing but portfolios of stocks or of ETFs which are weighted intelligently to track a theme, strategy, or an objective. So what this basically means is that these baskets are essentially nothing but direct equity portfolios which have been designed keeping a certain idea in mind, and any investor who has a HDFC Securities account can basically go ahead and invest in these portfolios. So now we will try to understand the difference between the traditional mode of investing versus the small case or the basket investing mode of investing. So when it comes to the traditional mode of investing, generally we as investors, all of us have picked maybe one stock or two stocks as the next best bet for us, maybe for the next 1 year, 2 years, or 5 years horizon. Some of us might even be over anxious to participate more eagerly in the markets, and we might tend to take positions keeping just the next 1 month or 2 months in mind, and we'll end up picking stocks accordingly. So when we do that, what happens is the single stock exposure, or maybe even if you have two stocks, generally the exposure or the capital that you've put in into this one particular idea of yours generally tends to be 100% of your capital, or at least 50% of your capital. And when we do this as investors, these are the downsides that we can note. So one is there is absolutely no diversification happening here. So if one of your ideas or gets stuck for some reason, or the idea doesn't work out, or it does not materialize for some reason, then your entire position gets stuck, because of which you have an unpleasant experience in the markets. So the second reason is with respect to higher risk. So when we talk about higher risk, what we are basically saying is that if one of your positions do not perform well, or if the only position that you've taken does not perform well, then not only is your position stuck, but it could incur in extended periods of losses in your trading account. The third one is, generally when we pick one or two stocks, there is lack of strategy that comes into picture. So when we as investors, retail investors, tend to pick stocks, it is either by going by news events which is happening out there. It could be geopolitical events, it could be stock specific events. The second one could be talking to our friends, talking to our family, talking to our colleagues who have started their investing journey, taking inputs from there and basically picking a stock. Third one generally could be doing our own research, which may be flawed, which may not be flawed. It is very difficult to comment on that, but these are some of the ways that we'll end up picking stocks. And generally, when this is the technique that we are following as retail investors, if we question ourselves as to what stock we find good today, it will be very different, or it will generally tend to be different if we ask ourselves the same question 1 month or 2 months down the line. So we might come up with different stocks at that time, which clearly states that, or which could very readily imply that we are not following a strategy per se here, but we are more or less picking stocks based on hunch, which becomes the third downside of single stock investing, which is lack of strategy. And because there is a lack of strategy, there is a lack of research as a result of it, which goes into picking that stock up. So the fifth one is, generally when we pick one or two stocks, it's a do-it-yourself setup, and there is no advisor guiding you on what needs to be done and when you need to enter, when you need to exit. All this is generally not prevalent when you do single stock investing. So now this is where small cases actually come into picture, or what we call HDFC baskets come into picture. So These baskets are generally well diversified because they're made up of multiple stocks inside the same basket. And because it is diversified, the risk or the inherent risk that the portfolio is carrying will be lesser compared to single stock investing. Because if one stock does not perform well for some reason, then at that point of time, the entire portfolio is not at stake. So the third one is every basket available on the HDFC platform is based out of or is designed keeping one specific strategy in mind. Now this strategy could be it could be based on momentum, it could be based on some theme that is playing out in the markets, it could be based on growth strategies, it could be based on value picks. So every basket that is being designed will have an underlying idea or a strategy behind it. So now coming to the fourth point, all the stocks that are selected for every specific basket has been selected keeping that specific strategy in mind, which would make these stocks very well researched. So every fundamental aspect of that particular stock which is being picked up into the basket is taken into consideration, and only after that does it come into a particular basket. So the fifth point is it is backed with every basket has been designed by a SEBI registered manager. So we do not have we have only professionals coming onto the platform and designing their basket. So that is the bare minimum criteria to come on the platform and to be able to follow your strategy and design a portfolio for everyone. So this is all about how small case investing or HDFC basket investing would probably be better compared to single stock investing with a do-it-yourself support. So now let us try to understand what we can understand about these baskets before we start our journey. Any HDFC basket that you invest in, before you start your investing journey, the list of stocks and the list of sectors will be disclosed to all of you as investors upfront. So you get to see how many stocks are a part of this portfolio, what do these, so which sectors do these stocks belong to, and what is the percentage weightage given for each particular stock or sector. So now secondly, every portfolio on the platform gets tracked using the performance of the portfolio gets tracked, and we also benchmark the performance against an index. For example, if we have a small case design which has most of the stocks as large cap stocks, then we automatically compare its performance with the large cap index. So all of us as investors will be able to understand and analyze if the portfolio has given a better than market performance. Is it giving a performance which is matching just the index performance, or is it underperforming the market? All three things can be very well understood and analyzed. So coming to the last point, every basket undergoes something called as rebalancing, which means that at any point of time, the advisor or the advisor who has designed this particular portfolio can make sure that if some stocks are not fitting into the investment criteria or are not performing as expected, these stocks can be removed from the portfolio and newer stocks can be added in its place. So this process of keeping the portfolio dynamic, keeping the portfolio healthy in line with the ever-changing market condition is called as rebalancing. And every HDFC basket undergoes a rebalancing. So now that we have understood all of this, let us come down and discuss the two new packs that have been launched on the HDFC platform. So we call these Tata packs. So let us just take a look at both these packs. Now, before we do that, one thing that we need to understand as investors is how Tata has managed to grow its empire, in the last 1+ century. So if we look at Tata as a conglomerate, as a business conglomerate in India, they have participated into basically most of the sectors that do a variety of business in India. So they are considered to be one empire which is having its business from salt to software. So now, when we talk about the sector-wise breakup, Tata under metals is doing business with its brands, that is Tata Metalinx and Tata Steel. And when it comes to IT, we have TCS, which is very well known, Tata Consultancy Services, Tata Elxsi, and Tata Class Edge. Under financials, they have Tata AIG Insurance, Tata AIA Life, and Tata Capital. Under automotive, we have Tata Motors, which is into the four-wheeler segment, which has become very popular now. Then we have Tata Autocom, Jaguar, and Land Rover. So under retail, again, business is being done under the brand names of Voltas, Titan, Chroma, Tanishq, Tata Starbucks, that is a partnership, then Tata Click, Tata Salt, Star Bazaar, or the Star Group generally, Westside, and Tata Tea. Now, under infra, we have exposure via Tata Power, Tata Housing, Tata Projects, and TCE, which is Tata Consultancy Engineers, as against Tata Consultancy Services. So now under telecom, we have Tata Sky, Tata Communication, and Tata Teleservices. Under tourism and travel, we have Taj, Vivanta, Ginger Hotels, and Vistara AirAsia. And under aerospace and defense, we have Tata Advanced Systems. So these are some of the core businesses that Tata has been focusing itself onto. This is by no means all the set of businesses that Tata is already doing. So there are a variety of other businesses also. But for the sake of simplicity, these are the major businesses that we can take a look at and understand in one single glimpse. So a couple of things to notice here is that when it comes to Tata Sky, when it comes to the Dish TV business, so Tata Sky has managed to acquire a leading position over here. And similarly, when we talk about automotive as a sector and four-wheelers as a business in India, Tata Motors, as all of you are aware, they have started launching one of the best lineups of vehicles, which have all been categorized as 5-star NCAP, as 5-star safety NCAP rated vehicles are being rolled out by Tata Motors right now, which has actually pushed the demand for these vehicles. And in most of the parts right now, Tata Motors as a business, or Tata Motors as a four-wheeler manufacturer, has been doing phenomenally well. And the brand image of Tata has managed to grow exponentially, especially within the last 15 years. So, and we do have industry heavyweights such as TCE, which is Tata Consultancy Services, which have been managed to, or which have managed to dominate the market with its leading position. So now that we have understood some of the core businesses that Tata is already into, what we will discuss right now is the two new packs that have been launched, keeping this in mind. So what we have basically done is launched two new portfolios on the platform. One is called as the Tata Group Service Pack, which is focusing solely on the service sector companies of Tata Group. So here we basically look at, so let me explain more about this particular small case, that is the Tata Group Service Pack. So over here, if we take a look at the second point, this group service business comprises of different areas such as IT, design and animation, communication and networking, hotel and tourism sector, and aviation. So basically the core service related businesses of Tata. And also note that this group owns brands such as Taj, Vistara, Air India, Westside, Zudio, etc., which are recognized globally. And a couple of other things to note: this group operates in more than 100 countries across 6 different continents, and this group has surpassed a record revenue of 10 lakh crores. So this basket is suitable for those investors who are looking into having an investment in the Tata Group, but very specifically in the service sector of Tata Group. Now, there are two ways to go about investing. If somebody is interested in investing in the Tata Group or the legacy Tata business, one is to park your entire investment in the Tata Group, irrespective of which sector you want to focus on. Is it the service sector or is it the manufacturing sector? A second way to think about it is, if you're more optimistic on the Tata Group's business, or the businesses diversified into the service sector specifically, then what can readily be done is you can explore portfolios like Tata Group Service Pack, which is a Tata portfolio specifically focusing on the service sector industry. So now coming to the market cap distribution, 60% of the portfolio belongs to the mid cap sector, 20% belongs to small cap, and 20% belongs to large cap. So most of the portfolio has its concentration in the mid cap sector. So now coming to the stocks and weights, this portfolio has exposure into 7 different sectors. So under retail, we have exposure via Trent, which is around 15%. Under IT services, it is TCS, which is around 20%. Under telecom services, it is Tata Communications, which is 15%. Telecom equipments, it is Tejas Networks, which is 10%. Software services, Tata Elxsi, that is 15%. Under communications, it is Nelco, which is 10%. Hotels and restaurants, it is Indian Hotels Company, which is at around 15%. So now, for anybody who wishes to take part in a portfolio like this, which is a concentrated portfolio made up of in and around 7 to 8 stocks, which is concentrated, focusing on the service sector in India, and also by taking exposure into one of the largest conglomerates available in India, which is the Tata Group. This portfolio is something that we would request you to explore. At the same point of time, this is a very recently launched portfolio. It's been less than a month since this portfolio was launched. So once we talk about both the portfolios, we'll also head over to the platform and show you how to or where to explore this particular portfolio. So now coming to the second pack, which is the Tata Group Manufacturing Pack. So this portfolio, again, unlike the previous portfolio, here we focus on those Tata companies which are into the manufacturing sector in India. So when we talk about this group's manufacturing business, it comprises of different sectors such as steel and metal manufacturing, air conditioners, consumer products, automobiles, watch and jewelry. And this group also owns brands such as Jaguar, Land Rover, Tata Salt, Tetley Tea, Titan, Tata Power, Voltas, Tata Steel, etc., which all of us almost in this session already recognize. So now, this basket is suitable for investors for investing for investment in manufacturing entities of one of the most efficiently managed group, which is the Tata Group, with presence across a variety of different businesses. Now, if we were to take a look at the segment-wise or the sector-wise breakup, under home electronics and appliances, we have Voltas with around 10% exposure. Under precious metals, we have Titan Company with around 15% exposure. Under iron and steel, we have Tata Steel with 15%. Under power transmission, we have Tata Power with 10%. Under four-wheelers, we have Tata Motors with 15%. Under tea and coffee, we have Tata Consumer Products with around 15%. Under diversified chemicals, we have Tata Chemicals with 10%. Under fertilizers and agrochemicals, we have exposure via Rallis India with around 10%. So these are the two packs that we would request all of you to have a look at and consider if this would be suited for your investment goals going forward. So what we will additionally do right now is head over to the HDFC platform directly and try to see where we can identify these portfolios. Now, before we proceed, if any of you have any questions, please feel free to post it in the chat box and I will take it up at the end of the session. So the first thing that all of us as HDFC account holders need to do is to head over to hdfcsec.com and click on basket investing, which is the third option given here. So when you click on basket investing, you will be redirected and a page will open up where all the available baskets on the platform get listed. So over here, in order to explore both these portfolios, what you can do is just type Tata over here and you will be able to notice the Tata portfolios coming up right over here. So the Tata Group Service Pack and the Tata Group Manufacturing Pack are both listed right over here. So in order to explore any one of these packs, you can click on the packs and all the details will be presented to you on the screen. For example, name of the pack will be mentioned on top. The advisor who has designed the portfolio the name of the advisor will be mentioned here. In this case, it is HDFC Securities, which has designed it, and a single line description of the portfolio as well as a detailed overview of the portfolio is going to be mentioned right over here. Now, on top of it, when you click on stocks and weights, the set number of stocks in the portfolio, the rebalancing frequency, the market cap distribution, and the sector-wise breakup, as well as the single stock breakup and the weightage is given will all be mentioned here. Apart from that, when you head over to the overview section, you will be able to see the performance metrics here. So keep in mind that this portfolio was launched not even a month back. It has hardly been 20 days since the portfolio has been launched. So in order to study and analyze the performance metrics of these portfolios, we need to give it quite a bit of time. So as of now, this portfolio has been curated for those who already want to invest in the Tata Group. So now, with this said, a couple of other things to note. In order to invest in these portfolios, you need not open any new accounts. All you need to do is have a HDFC Securities trading and DMAT account everything else gets integrated with your account directly. So whenever you invest in a HDFC basket, money is debited from your trading account and stocks are credited to your own DMAT account. So you own the set of stocks. And just like normal stock investing, dividends are paid to your bank account directly. So with this said, I do sincerely hope that all of you who are on the call, would head over to HDFC platform post this session and take a look at both these facts and try to understand if it is fitting your investment requirements well. So with this said, I'm opening the session to any Q&As that any of you would have. Happy to take any questions from the audience. So the first question is, when were both these baskets launched? They were launched on December, that is on the last December. So it has been less than 1 month as of today. Will it not be concentrated on one corporate? Any adverse news on the corporate affect the portfolio? So it is meant, the portfolio is designed to be concentrated on any one particular conglomerate here. So the idea behind this is there are a lot of investors who prefer investing or who trust one particular corporate, and here it is not that one particular conglomerate will suddenly get bad news for all of its sectors. Generally, what is happening is you're investing in a conglomerate, but you're investing in a conglomerate which has diversified its business into a variety of sectors and into a variety of companies into those sectors. So generally, the group cannot be affected as such. It is one particular sector which can get affected, as a result of which the sector which this particular conglomerate is doing business in could get affected, which could be 7% or 10 or 15% of the portfolio. So when it comes to risk component of it, that is how we need to understand whether or not we need to be investing in this portfolio. Generally speaking, a brand as big as Tata, when news events do come out, it will be stock specific or it can be sector specific if an entire sector is undergoing changes in India. It generally is not conglomerate specific. So I hope that answers your question. Any extra charges will be levied by HSL for buying these two packs? No. So generally, when you buy any pack, the normal brokerage charges which you generally tend to pay when you buy stocks into your portfolio, that and the statutory charges which you will any which ways be paying, like STT and so on, when you transact in stocks, only that will be the charges. So these two packs are essentially free of cost, so you will not be incurring any additional or extra charges. Is there any expenses charged by HDFC to manage this small case? No. So the idea behind this is for the HDFC team to introduce these two baskets exclusively for their customers as completely free. So generally the brokerage and STT charges will be applied, but apart from that, the packs have been deliberately kept free, keeping the customer's interest in mind. Is it possible for a portfolio with mix of sector and corporate? So I do not understand what this question means. So this is a portfolio which has participation in a variety of sectors. So service by itself cannot be called as a sector because inside service there are various sectors. So inside manufacturing there are various sectors. So this portfolio does have a variety of different sectors, or both these portfolios have different sectors inside of it, but is focused keeping one legacy business in mind, which is the Tata Group. Any minimum investment? Yes. So both the portfolios have different minimum ticket sizes. When you head over to the platform and when you click on any one particular small case, on the right side, you will see the minimum ticket size. So for example, if we were to go and check the minimum ticket size of any of these small cases right now. So if we head over to Tata Group service pack, the minimum ticket size can be noted here, which is around 42,884. Similarly, if we go back and take a look at the Tata Manufacturing pack, so at this point, you will notice that the ticket size here is somewhere around 16,868. So these numbers can vary, with time, but it gradually changes with time, but that is the minimum ticket size as of now. Any target for growth object? So when it comes to targets, it is quite impossible to come up with for anybody, for any analyst or for any investor, it becomes a very challenging task to come up with a target, because as such it is not possible for us to understand where the market is heading, at least in the next 3 to 6 months. No analyst will be able to predict the market accurately every time, because it is in the nature of markets that it cannot be predicted like that. So keeping a target in mind would not be the right approach to investing in this particular basket. Those of us who believe in Tata as a brand, and who believe that Tata as a brand is expected to grow even further going forward at a certain growth rate, and if you have that particular belief system already in mind, and if you're looking for a portfolio to invest in, especially a portfolio which does not incur any other additional charges, if you're looking for a portfolio like that, then this is the portfolio you should consider, and those are the types of investors who should come to these portfolios. Generally, no portfolio can be given a specific target to achieve. That is not how portfolios are designed. And similarly, it would be very difficult to even come up with stock price targets, knowing the fact that markets by its nature itself cannot be speculated. So stocks will be a different matter altogether. So how much is the brokerage? I think you can reach out to your relationship manager. If you do not have the contact details of your relationship manager, you can reach out to the customer care at HDFC, and they'll guide you towards your relationship manager, who will in turn disclose the brokerage to you. What about buyback, dividends, splits, etc.? What happens when such corporate changes happen? So nothing changes. Investing in a small case is as simple as investing in these stocks directly. Essentially, everything remains the same, whether you're investing in these stocks directly or via a basket like HDFC. So for example, to give you an example, in the event of a dividend, so generally speaking, let us say you hold a stock directly in your broking account through and you've purchased the stock directly. When dividends are paid out, it gets paid out to your bank account. So even when you invest through a HDFC basket, let us say when these set of companies disclose their dividends, as and when they're disclosed, they're credited to your respective bank account. So there are no real changes between investing via basket investing or via stocks directly. It's one and the same. Will there be brokerage? I think I've already answered this question. Any lock-in period? Absolutely not. So we believe in designing the most transparent portfolios or baskets out there. So there are no hidden charges, there are no lock-in periods, and there are no exit loads whatsoever. So this is something that we've always followed. So up until this point, none of these charges have been introduced. So, and lock-in period is definitely something that we do not plan on introducing, at least in the near or the far future. So rest assured, you can invest with your peace of mind. There are no lock-in periods. So from the basket, can we sell a single company, or do we need to sell the entire basket? Both are possible. If you do need to sell a single company, the process is fairly simple. Once you get your investment done, you can head over to your basket. There under investments, your baskets will start reflecting. So over there, you can click on it, click on manage and sell one stock. It is definitely possible. And we have covered the process of how to follow these step-by-step processes in our previous streams. So you can head over to the HDFC Securities official YouTube channel, and over there you will find the step-by-step process of following this of how to exit a single company from a basket. Time frame again, so it would not be right on our part to understand the time frame of investment, not just for Tata packs, not just for any small case, or not just for any instrument that is out there. There is no such thing as time frame for any investment vehicle, unless and until that vehicle is already giving a fixed return. Since these are equity linked products, the longer you're invested in any portfolio or any equity linked scheme that is out there, the better your chances are, because eventually the markets are expected to go up. So maybe by the year 2040, by the year 2050, the markets would have rallied significantly higher than where we are today. So keeping that in mind, the best time frame would be the longest time frame that you can invest for. So that is how I would like to address it. At any point, can I sell off part of my holdings in these two packs? Absolutely possible. At any point even means 1 minute later after you start your investing journey. So like I had disclosed previously, there are no lock-in periods. So if you invest today, tomorrow you can either exit out of the entire basket or you can exit out of one or two stocks as per your wish. The minimum investment amount includes the brokerage charges, or that will be extra. So the minimum investment amount says the minimum investment amount. So that is the amount that needs to be invested in the portfolio. That will not include brokerage. Whatever is the 0.3, 0.4% brokerage charges you are incurring, that will be additional. So since the launch of the basket, the service pack and the manufacturing pack is at -4%. Can you explain? So the portfolio has been launched 15 days prior and the markets have also corrected along with it. So these portfolios are expected to more or less trail the market at least for some time before these packs start, or before the companies that are a part of this portfolio starts delivering returns. So since the markets have also corrected, that is how the portfolios have reacted. So you can very well visit any of these portfolios, take a look at the graphs to understand better, because the market graph is also shown right there. So these portfolios are meant for long-term investors who want to stay invested in a portfolio for a prolonged period of time. You're welcome. What is your perspective of Sensex reaching by December 2023? Again, so these are things that we should not be speculating on. This session is to discuss only about these two packs. But again, coming to your question, it should not matter what any analyst is speculating. These things can, go wrong all the time. So the best thing that we can do as investors is to stay invested in portfolios for as long as possible, and also to start investing in a systematic format using something called as SIPs. So additionally, just a point out here, small case investing or HDFC basket investing also support SIPs. So if you wish to set up SIPs, you can readily do, we can readily do that. And that is the most ideal way of investing. Does it mean I get to buy at -4% cost now? It is not cost. There is no cost that you're incurring here. Originally, when we launched the portfolio versus what the portfolio is at right now, yes, you're able to buy it at a 95% of its investing value, but that's about it. That does not mean it is, there is no pricing structure attached here. It's a free portfolio. So to answer your question, both yes and no, it depends on how you look at it. But yes, you are able to buy the portfolio with 95% of its original intended minimum investment amount. Will the stocks of these packs appear in my DMAT account the next trading day, or the T+1 or the T+2 days will apply? And it's a pretty big question. So let me tell you, the stocks will appear in your DMAT account directly, and it will be the same process. The stocks reflecting in your DMAT account will, just because you are investing via a small case or HDFC basket, does not mean it will be any different from direct stock investing. Everything works one and the same. Only if the Sensex gains, then these baskets will also give better returns, right? So most likely yes, because Tata packs generally tend to correlate with the market, but not necessarily all the time. So there might be some instances where Sensex is giving a positive return, whereas Tata pack might not be able to perform well. There might be some instances where the markets are under delivering, but Tata as a group is performing really well, so the pack or the Tata companies start going up. So all things are possible, but generally speaking, yes, there will be a correlation between whether Nifty or Sensex or how the Nifty and Sensex is performing versus how much the portfolio is delivering. So there will definitely be a degree of correlation there. This is not just for Tata pack, but for any portfolio out there, which is a direct equity portfolio. So with respect to brokerages, it is always better to clarify it with your relationship manager. You can reach out to them. If not, if you do not have their contact details, reach out to the customer care number and they will be able to guide you better on this. Yes, you're right. If the basket is rupees 16,898 today, and tomorrow, let us say the Sensex goes down, will the investment amount be less? So let us say Sensex goes down or Nifty goes down, and at the same point of time, the pack value also goes down, because inside the pack is nothing but Tata companies. Let us say the value of these Tata companies also goes down because the market is falling. At that point of time, the basket's minimum ticket size also will reduce. So the basket's minimum investment amount is decided based on the stocks that are there in the portfolio and the current market price of all these stocks multiplied by number of stocks that are there in the portfolio. So that is how it gets decided. So I think I've answered your question. So the next question is, does it mean you are pooling money and investing in companies shown in the package, and it is reflected in my DMAT account as a share? Absolutely not. So nothing is getting pooled, nothing is happening individually. What is happening here is, when you invest in a basket, you are basically indirectly punching or directly punching an order to purchase all these stocks into your DMAT account one by one. So there is no pooled account concept here. It is just your trading and DMAT account into which you're buying all these stocks, which on the outside gets reflected as a basket investing. So that's about it. Okay, but getting your for those of you who want to reach out to customer care, please do mention your registered mobile number or your registered email ID and ask for the details of your relationship manager, and they will pass it on to you. So every customer will have a relationship manager mapped to them. If not, you can also visit your nearest HDFC branch and seek details from there or get it mapped to that particular branch. More likely. So my money today will be buying more shares if the markets goes down. Not more shares per se, but most likely if the markets go down drastically and the portfolio goes down along with it. It is not about markets here, it is about the portfolio. Since the portfolio is correlated with the markets, generally speaking, if the markets goes down and if the portfolio goes down along with it a little bit, you might be able to buy, or the portfolio becomes a little cheaper for you to invest in. That's about it. That does not mean you will be buying more shares. The number of shares will remain the same, but the value of the share would have decreased, which means you're putting in less capital to buy it. That's all. So I think with this said, we have answered all your questions. So the last question is, if I don't want to rebalance my small case pack, is it allowed? Yes, it is allowed. Rebalancing is completely up to you as the investor. So if you want to skip your rebalancing, you will have the skip rebalancing option available. And every time a rebalancing notification is sent to you, you can skip it. So the complete control of the portfolio is always with you, not with us. So with that said, you're welcome. So with that said, I believe all the questions have been answered. Thanks a lot, everyone, for taking your time out and tuning into this session. So I hope to see all of you maybe in a future session going forward. So thanks a lot. Take care. Bye.